the Straits of Hormuz will continue to be a problem, but the importance of the Straits is diminishing by the second. I think that a tariff dividend check is coming.
How would you say the markets are going to respond in the next coming weeks? We're speaking on April 8th, and this is the day after a ceasefire between Israel, Iran, and the U.S. has been announced the night prior, and now the Strait of Hormuz is partially open, and we have a situation where Brent crude has fallen 20% overnight. So how long will this stay open? How will the rest of the war progress, and how will markets react to what's coming? We're going to talk about this and much more, including markets and metals and mining stocks with Lior Gantz, founder of Wealth Research Group. Welcome back to the show. Lior, good to see you.
Good to see you too.
Here are some of Iran's demands for permanent
Ending
ceasefire.
the war.
Yeah, ending the war. Among the list, lifting all primary and secondary sanctions on Iran, continued Iranian control, so basically sovereignty over the Strait of Hormuz, U.S. military withdrawal from the Middle East, an end to attacks on Iran and its allies, the release of frozen Iranian assets, and also not included on this particular list is war reparations. The U.S. and Israel have to pay war reparations for the damages caused to Iranian infrastructure and personnel. Okay, what is the point of this 2-week war is my first question. If
2 week ceasefire,
sorry,
you mean?
2 week ceasefire, 2 week ceasefire. That's what I meant to say. This is 2 week ceasefire if the general consensus is that none of these demands are going to be met.
Sure. And what we can do is look at previous ceasefires that happened during the last 2.5 to 3 years between President Trump and different organizations or countries or nation states, etc. in the Middle East. We always see that the points are very far away. Sometimes, like in the case of Putin and Zelensky, we see that it doesn't come closer for months and months and months. So it's a question of pressure and military leverage and other points, but it always starts very far. And the Trump doctrine is to show that the American people and the world, whether or not both sides were able to be flexible or not. And that's really what this 2-week period primarily is about in terms of what's going to be shown to the public, especially the American public, which doesn't like the war at all. It's not able to rally around the idea that this is like Germany in 1935, and we have a chance to. They don't see it this way. That this is like Germany in 1935, and we have a 4-year window before this becomes a real problem. So they're not making that connection. Perhaps it's the distance. Perhaps it's the trauma from 20 years of nation building with Iraq and Afghanistan. Perhaps it's the adventures in the jungles of Vietnam. I'm not sure exactly how to point this, but what I would tell you is that is something that President Trump is very attuned to, especially with midterms and especially with the stock market and rising oil prices. And there's another thing. There is something called the AUMF, which is basically how he can invoke either a military operation and use military force, or has to declare a war. In 1973, the Congress enacted this act, and basically gives you 60 days of using military force without a vote of Congress. Otherwise, you need to declare war, and that takes both houses. So if you were President Trump and you needed more time, you either give it a 2-week ceasefire, and then you can start a new operation and have new 60 days, which would be obviously very unpopular as well because everybody will see your game. Or you'd need to show the American people in this period one of two things. Either one, that Iran is a much bigger threat than we thought. That would require the Trump administration to show something very, very threatening, and to really rally the American public around it. I'm very doubtful that this could be done. Or there's a different plan behind the scenes. I think that the ceasefire itself is very fragile, and and that's why Trump needed the ceasefire. The Iranians or the Iranian leadership needs the ceasefire because they're trying to
Right.
understand exactly how to proceed from here after 36 days of losing
Yeah.
a lot of their military assets and otherwise.
From the market perspective, we just want to know what investors would like to know how long the Strait of Hormuz will remain open or closed. And so here we have a scenario where the oil price, WTI, fell 20% last night, still not back to its pre-war levels. So the market doesn't believe that the war is over, just that the ceasefire is happening. But actually, as of a couple hours ago, Iran closed the Strait of Hormuz again because it was reported, this is Iranian state media is reporting that Iran has closed the Strait of Hormuz in response to Israeli attacks on Lebanon. The Iranians said that Lebanon is not part of the ceasefire. And so the Israeli attack on Hezbollah in Lebanon, which is ongoing, broke this ceasefire. And this is from CBC, so there's a statement from Carney. Prime Minister Mark Carney said in a joint statement with other world leaders that that basically he believes the ceasefire should include Lebanon. But Lior, let me just get your take on why this is happening currently, and why the Israelis are pursuing their own objectives here, parallel to the ceasefire.
Sure. The Iranian regime's strategy towards becoming the biggest and mightiest force in the Middle East included the creation of proxies outside of their borders to um, uh, um, make the war not on their terrain. That has been their main lesson after the 8 year war between them and the Iraqis between 1980 and 1988, which included mustard gas and all sorts of atrocities. One of their biggest lessons was let's build proxies that distance wars from our terrain. And one of their biggest ones are the Hezbollah, and that's in southern Lebanon. And Lebanon is a very unique country because it has a government that is not able to assert its sovereignty over the country because of the Hezbollah uh, being part of politics and also conquering their entire south of the country. So one of the key objectives of the ceasefire was to create this distance between the two fronts and not to connect them. And what the Iranians are trying to do is, of course, connect those two fronts and say this is a bundle deal. So that's where really the negotiations that you're seeing in real time are happening.
Ultimately,
And
how long do you think the Strait of Hormuz will stay closed? Nobody knows for sure, but if you had to speculate based on current events and how things are progressing, how would you say the markets are going to respond in the next coming weeks?
I think the Straits of Hormuz are going to be a problem for months on end.
Hmm.
The reason I say that is just so, and also to give it some perspective, this does not mean 100 or 150 or $200 oil at all. Um, the Straits of Hormuz are basically a choke point that the Iranians can use as leverage because the Qataris, the Emirate countries, Kuwait, and the Saudis all use their side of the strait, the Persian, there's the Persian Gulf side and there's the Arabian side. And basically they all have to go through this part that's a little narrower, and and there's an island there called Hormuz. That's the Straits of Hormuz. What you want to do, ideally, and that is really the main point of the day after this war is over, in terms of oil, natural gas, and everything that comes out of the ground in that region, is to do away with the Hormuz Strait, make it less important than it was before. Take away that leverage from that regime. The way you do that is you turn, if you look at the map, you turn all the infrastructure away from the Straits of Hormuz and towards the Red Sea. And if you can do that, you bypass two choke points. that are very important, and both have been used. One is the Hormuz Straits, and two is the Bab and Mandeb Straits, which the Houthis are projecting power over. If you do that and you get to the Red Sea, which the Saudis are already doing, and I assume the Emirates are going to do very shortly, and other countries will join them as well, then you are looking at the final choke point, which is the Suez Canal. You can also bypass that if you create infrastructure that goes all the way to the ports of the Mediterranean from that Israel has and Lebanon has and Egypt has in the Sinai Peninsula. That will create a lot of safety. That will weaken the ability of the Iranian regime to hold the world hostage over the Straits of Hormuz, and it will do something amazing. And that is basically the crown jewel. It will allow India to export to Europe via that exact infrastructure route. Basically, the same route that those pipelines will go. There will be parallel train routes and roads, etc. And if India can export to Europe, connecting the two of the biggest economic blocks in the world, and going around these actors in the Middle East that have acted for thousands of years as this toll booth in the middle, then you can create amazing prosperity. That's what the United States want. That's what India wants, and that's what a lot of the countries in this region want. So the answer is the Straits of Hormuz will continue to be a problem, but the importance of the Straits is diminishing by the second, and that really is the chess game that's being played here.
I mean, Saudi Arabia and Gulf countries have their own pipelines to bypass this, right? Saudi Arabia, I read, is activating one of its pipelines built specifically for this purpose.
It is trying. They already have the pipelines. They already have the port in Yanbu, which is on the Red Sea. The problem is they're still getting hit by drones and other things from Iran. So and some of the infrastructure is getting built right now. What's actually being discussed is also creating a lot of pump stations on the way. So if you hit any part of the pipe, you're not hitting the flow of the oil because it's getting pumped out. It's held in storage, and then once fixed, it can continue. And I'm sure that once all the infrastructure is in place, it's going to have drone protection and everything else. Really, the Iran, if you look at it on a map, it is the connecting bridge that China wanted to use for their Belt and Road Initiative, and what Russia wanted to use for their, you can call it Belt and Road Initiative, but it went basically north to south and through the Caucasus and then into Syria and projecting power into the Middle East. The Russian project is done because they're out of Syria, and Trump has brokered peace between Azerbaijan and Georgia, making it and Armenia. I'm sorry, making the Caucasus much safer and basically killing this for Russia. China, obviously, much more formidable, much more sophisticated, much richer, and everything else. It's not as simple. You can check it. You can check their monopoly by introducing India to this equation. And that is exactly what's being discussed right now and actually happening right now.
How does this change or impact your outlook for precious metals and perceived safe haven assets? If you think that the region in the future is probably going to be safer, that may be a bear case for gold long term. However, what we've seen over the last 4 weeks is gold moving in lockstep with stocks and other risk-on assets. So either we think that gold is going to be a risk-on asset going forward. In other words, if this situation improves, we should buy gold, or gold is going to default to its, to its standard risk-off safe haven status, in which case you should short gold. What do you think?
It's a great question. The reason that gold has actually plummeted during the war is because the price of oil risen dramatically, which makes it much less profitable to mine gold. So you've seen mining stocks come down hard. That's because their costs are going up, and the price of gold and silver has come down because of profit taking. Gold and silver have been some of the best performers in the last 2, 3 years, and a lot of big funds and institutional money and countries had to wound down a lot of their positions during the last month, and they've used gold and silver profits in order to do that and fund many of the things that they've done. Look at Turkey in the last 3 weeks. Google Turkey selling gold, and you can screen share this for your audience to see how much Turkey has had to sell their gold reserves in the last 30 days. It is insane. Um, Over the long term, the what drives the price of gold forward is the fact that we are exiting the hyper globalized world where the dollar is this flawless medium of exchange between countries. That is no longer the case at all. Countries can be either tariffed, sanctioned, their assets can be frozen, and these are not threats that other countries are willing to entertain. And what we have to also acknowledge is that China is a much more formidable adversary to the United States than the Soviet Union was. Their banking system is much more advanced, much more sophisticated, and they are creating ways around the dollar, and they will be able to invite a lot of the countries that ideologically are closer to them to work with them on the yuan. So, in the long term, the gold is going a lot higher. Gold is going above 10,000 an ounce, and probably a lot higher than that, because it's asserting its role. Keep in mind, it was one president with one decision that changed how gold is viewed in the world. It has never been a global fiat monetary system. There's never been something like this. It is something that only happened in the last 55 years. Before 1971, we've never had the entire world running on one currency with no backing. Gold, silver, rice, and stones, whatever, silk, whatever it was. So gold's going higher. Silver can go a heck of a lot higher if it is being remonetized, which is something that's being discussed right now in and actually implemented in India. Silver is starting to be used again as collateral, and if and is allowed to be bought in pension funds. And if that continues to happen in other countries, if more legislation comes back for silver and it gets remonetized, well, you can argue that because of the demonetization of silver, the gold silver ratio has gone even to 120 to 1 a few years ago, and it's going to go a lot lower if central banks are going to start buying silver again.
If you think about why people have traditionally bought gold, it's also not just to hedge against geopolitical risk, but to hedge against the strength of the dollar. Something interesting happened in the last couple of weeks when Iran charged toll for certain ships to pass through. They charged in either dollar-denominated stablecoins or yuan. Why did they pick the Chinese yuan as a currency, do you think?
Well, they're obviously sanctioned out of the SWIFT for many years.
Yeah, but they could have picked, they could have picked their own currency. They could have picked, I don't know, Russian rubles, whatever, right?
Their currency is a million to one with the dollar. They don't have a real currency anymore. They picked the yuan because the Chinese are the biggest consumer of their sanctioned and non-sanctioned oil, especially their sanctioned oil with the Ghost Fleet. And China is the country that is able to continue supporting this regime for many reasons, and so it's very logical that they would use the yuan as their
But you don't see a
primary
global
source.
shift. towards the yuan as a global reserve currency right now?
Um, Not yet. Not
Okay.
yet. It's certainly the number two candidate after the dollar. There's 100%. This is the country that is challenging the dollar. China is challenging the United States on many levels. They're a very sophisticated, formidable, powerful, successful. Their system is working. Their system is working. To us in the West who believe in capitalism and freedom and everything else, we are baffled by the success of the CCP and their system. But their system is not pure communism at all, and to not respect what they've done is is not the way to proceed from here. The best way to proceed from here is to acknowledge that they are a very important country, that they have big aspirations, and you have to do everything possible as world leaders to avoid any kinetic war between the United States and China, and preferably any proxy war between major regional powers that are directly affected by China and the United States. And I think that the last year and a half since, or year and a little bit since Trump has come into office, what he's trying to do and is to reach the point where in the month of May, when he goes and meets with Xi, that they can de-escalate the relationship between them, between the countries. And both are trying to come to the table with as much leverage as possible. But I think that after their meeting, you will see a de escalation of both tariffs and other categories that impact them, like AI, chips, pharmaceuticals, space, defense, of course, rare earths, etc. I think that we are reaching the peak of the problem between the China and the United States for this year, for 2026. There'll be many more problems along in the years to come, in the decades to come, etc. But we are reaching a great point where the two leaders are going to meet face to face, and a lot of the work has been done already by Besant and Jameson Greer on the American side, and their economic and trade delegates on their side. And it does look like the two countries can de-escalate. The name of the game is really oil. And the reason the name of the game is oil is because oil fuels both of these countries' electricity buildup. As you know, in the United States, they need to triple their electrical demand by 2030 just to meet all the compute power that comes out of the AI centers, data, and of course everything that has to do with inference and AI, etc. The same goes for China. The difference is that the United States is the world's largest producer of oil. It produces more oil than Russia and and Saudi Arabia combined. It is the powerhouse of oil production. And that is not true of the Chinese. And that is really, if you look at the leverage that Trump is trying to bring to the table, both Venezuela and the Straits of Hormuz, they're both the same theme. Can I, as the President of the United States, moderate and control the amount of oil that goes into China? If I can do that, I have something big over them. Just like the Chinese have successfully created a lot of monopolies and supply chain issues for the United States. So I think that heading into this summit between Xi and Trump, you're going to see a lot of de-escalation, which is going to be very good to the markets. I think that when it comes to gold and silver, the main thing you should look at is not either escalation or de-escalation of geopolitics. I think that in the month of June, you will have something that's unprecedented for the dollar, for gold, and for silver. And that is a new Fed chair that has a drastically different view than all the Fed chairmen that have come at least in the last generation, but maybe even more. And this Fed chairman believes that the United States, and he believes that in conjunction with the Trump administration, the United States government, being that it leads the world's biggest military and the world's biggest economy, should pay the lowest interest rates of any country in the world. And that is something very drastically different than past Fed chairmen. The second thing he believes in is that you don't raise interest rates when GDP goes up because of salary, what do you call them? Salary spirals, like when all these ideas that help the middle class and hurt the elite. He doesn't believe in that, and therefore that is a big change.
Well, bottom line, how have you repositioned your portfolio since February 28th?
Well, that's the best question of all. Um, One thing that was very fortunate was to cash up a little bit before that. You could see the buildup and tensions and everything else. That is something that is rarely talked about, David, but I'd like to just bring it up for 1 second. There's a lot of data out there, and you can and maybe you've looked at charts and stumbled upon it online of what happens if you miss the best 10 days of a year, of a decade in the S&P 500. If you come across this, it's amazing. If you miss the best 20 days, and then the best or miss the best 10 days, or miss it's an argument for buy and hold basically, because if you miss the best days, you're almost at break even over the long term. It's amazing to see those charts. What's not being discussed as much is how much you outperform the markets if you miss the worst days. And it's pretty dramatic. And I know that everyone likes to say you don't time the market, you put time into the market. And that is very true. If you don't miss the best days, you will outperform the S&P 500. That is true. Um, so if you don't panic out, you won't miss the best days, and you will outperform. But if you are able, and you do get a sense that there's going to be something big, and you can cash out proportionally out of some of your positions, you will actually outperform the market dramatically. So that's one thing I wanted to just make sure people understand, because if they research it on AI or everything else, research on how much I would outperform the markets if I was able to be out in the worst days, then you'll see that there's a lot of value there. Ever since then, I have basically realigned a lot of that cash into three main categories, which I think are coming. One is lower rates, and what I call the Trump bribe months. The Trump bribe months are these months between now and the midterms, where he has to convince the American people to go red. And in order to do that, he has to focus on the consumer, and he has to focus on housing. And so housing has been in the worst market ever. Ever. The median home buyer is now 49 years old. That's insane. You spend half your life renting, half of your life, or even more, renting. It is insane. Only 12%. You get married late, and you can't afford a home. Trump is tackling that. If you're aware, he already did a hedge fund ban on single-family homes, so the Blackstone can't gobble up supplies, and other firms. I'm bringing up Blackstone because it's a well-known one. And I think a lot of more reforms are coming in housing. A lot that are going to make it much easier for the young average couple to buy the American dream and to own a piece of land. So that's one. Two, I think either a moratorium or an equivalent to a moratorium on capital gains tax when you sell your house. There are many millions of Americans that are in retirement age and they would gladly sell their homes and move to a nicer weather, to a different state, better taxes, etc., if they would not have to pay so much in capital gains tax because they're sitting on houses that are at an all-time high. Third, I think that a tariff dividend check is coming. He needs to prove to the American people that tariffs.
Sorry, when were the first two?
I didn't say a first two. I said a tariff dividend check is
Oh,
coming.
sorry, I misheard. Okay, I thought you said third. Okay, yeah, wow. Okay, well, he promised that, and then he said,
You were like, he missed me. He
did
missed
I?
my
Did
first
I?
two.
Yeah. Where was that in the check? In the mail? No, but he promised that. Remember, and then he said he never said anything like that, and then he took it off the table, probably
I
for
don't think
legal reasons.
Okay.
Yeah.
I'm with you. I'm with you. I'm listening.
Yeah. Probably for I'm just saying probably for legal reasons because the Supreme Court struck them down because you're not supposed to, tariffs aren't supposed to be for revenue, right? And he said refund because it implies revenue. But anyway, I'll let you continue.
Yeah. So I think a tariff dividend check or something in the neighborhood of that is coming.
Okay.
Because he has to prove to the American people that tariffs work, and nothing says that something works like a check in the mail. So and that will get you votes. So that's something I think is definitely on the table. So housing and is something that I'm very invested in right now. Stocks that benefit from a better housing market, furniture, etc. And the consumer. I think the consumer who is sitting on $8 trillion in money market accounts. How much does a money market account pay right now? Do you know? 4.5%. If Kevin Warsh is coming in June and is cutting interest rates, that 8 trillion is leaving the money market accounts. Not everything, but about 2 to 3 trillion will likely leave and either go into housing or elsewhere into the economy. And that means the consumer is going to feel good. And I think he will spend. When he buys a house, he will spend on furniture.
Okay.
He will go out. So you have restaurant stocks. Anything that spells out a better environment for the consumer. The consumer's been through a lot with President Trump. A lot. He's really flexed the muscles of Americans in his time here. The VIX up, down, Liberation Day, tariffs, Iran. Now it's time for some smooth sailing, and I think that's what you're going to see, and that's how the portfolio is aligned.
Okay, excellent. Thank you. Where can we learn more about your portfolio and your strategies?
wealthresearchgroup.com. You can subscribe to the free newsletter on the homepage. Every Sunday, Tuesday, and Thursday it goes out. And actually, if you want to see my personal portfolio, you can go to wealthresearchgroup.com/portfolio and actually download it.
We'll put the links down below, so make sure to follow Lior and the Wealth Research Group there. Thank you so much again, Lior, for coming on. We'll speak again soon. Take care.
Take care.
Thank you for watching. Don't forget to like, subscribe.